Hello, today we will talk about market structure, how to determine the true maximums and minimums, how to trade strictly on the trend, because a lot of people just trade the wrong structure and get a lot of stop losses. Today, I will show you the structure that has been updated, and it is the future of smart money. Watch the video to the end to fully understand this topic. Today I will tell you all the basic elements. Today there will be a big video, of course. It will be divided into several parts, because there's a lot of information. This structure relates to our trading strategy, which we trade in our community. This is an incredible topic. It is very different from the structure of classic smart money, and it is much more effective. We used these principles a long time ago, 23 years ago. Watch this video to the end, and you will understand a lot. Classic smart money, you probably have already watched a video on YouTube on the topic of stop losses in smart money, or another stop loss. It does not matter. Everyone trades the same thing. Everyone learns the same thing. Swings, that is, maximums that are formed by such wavy movements. Minimum, maximum, and so on. And you were taught to trade if the trend is not going down. Then you go on sale here, here, here. That is on the test of some zones of interest. They also call it an order flow, that is a flow of orders. In fact, this is a very dangerous and ineffective structure, because it does not confirm any liquidity, any stimulus in the form of an inducement. What is an inducement? As a rule, this is liquidity before the buy, but we also use it to confirm our structure and trend. It is also very cool to use the average sliding in trading on the trend. But we will talk about this later. So most traders use this kind of structure. They also use, for example, 0.5 trading, that is something like this. If the price, this adjustment, trades 0.5 of the range relative to this maximum and this minimum, then this swing will be strong. And if the price breaks it, then the price will go in the rising trend, that is, it will be a break in the trend. We see that here, for example, the price also trades 0.5. Accordingly, people, for example, after breaking this maximum, will continue to consider some purchases here. But as a rule, the price in such cases continues to fall down. Why does this happen? Because you do not take into account such a factor as the market stimulus. It's all tied very tightly to the psychological component of the market of people. That is how the market involves people in buying or selling. That is, it bites them to open false positions. That is not in that direction. Most likely you have had this many times. That, for example, you have a break there, and at the same time the price does it super impulsively. It creates an imbalance here. Here. It then goes to the test. And you go into a deal here, for example. You put a stop. You put a take. Yes. But in the future, the price reacts and goes down like this. Most likely you have had this many times, and you have already received a stop loss many times. And today I will show you how to avoid this. And how to trade strictly on the trend. Choose a clean movement, and understand where the market really strives. That is, use all possible inputs. Here. That is, I want to say that the market always moves only with the removal of a specific stimulus in the form of an inducement. That is, the structure does not look like this, but about this way. That is, we always have an inducement everywhere. The price removes it and continues to move further, in the downward direction. Thus, our points of oscillation are confirmed here. That is, our maximums and minimums are true, as soon as the price moves up here, and removes this internal structure. At this moment, the minimum is confirmed here. Here is this point. Then, for example, when the price left the interest zone, and made an update here. This is called a break in the structure in the continuation of the trend. That is a boss. When it made a boss, the maximum is confirmed. Only when it updated this minimum, that is, made a boss. At the same time, the upper point of oscillation is confirmed here. Now you have found a minimum and a maximum. For this maximum, you need to find a new minimum, to determine the range in which you will work. Where is the new minimum confirmed? Here? No. This movement did not make any correction in this impulse. Therefore, the minimum will be confirmed in this place, because the price gave a new impulse, which removed this trap in the form of an inducement. Then the price traded within this range. Went further below. made a new boss, and accordingly confirmed a new maximum. Here. And in this way, it will always confirm our oscillation points. That is our maximums and minimums. You may ask, where will the break in the structure be then? The break in the structure will not be on the first bounce. Not here, and on the main confirmed oscillation points. We determine them in order to understand what is our trade range, and in order to understand where there will be a break, where there will be no break. For example, the price goes further below, forms new bounces, removes them, accordingly confirms a new minimum. But suddenly, for example, it broke through the zone here and went higher. Imagine, not always in the same trend, it makes a break from this maximum, from this point of oscillation. And in fact, this will mean one thing for us. What happened? Change. That is a change in the character of the trend, from the downward to the upward. And here you can really buy. Also after removing the inducement. Here, on the contrary, in the downward trend, the inducement is always at the nearest maximum. In the upward trend, the inducement is at the nearest minimum. That is, when it removes the minimum, the top point is confirmed first. And after the boss, the maximum, the minimum is confirmed further. This is what we talked about. The easiest part, the very base. Now let's talk about strong and weak points of oscillation. That is how to determine fake. A little bit from non-fake. There is such a topic as trading range. That is when the price is trading range. You see, you have, for example, here this maximum and this minimum. That is, you take your trading range and measure its average value. We see that the price 0.5 has already taken this impulse. Therefore, this range will be strong and this high should not be violated. Only if, for example, the price wants to go higher. That is, it will be a break. Next, we see that here we have a range. Also, it seems to be traded. Well, let's assume that it was traded. That is, this high is also strong. Next, we see that this range. Well, let's assume that too. Although no, here you see it is not traded. Therefore, in fact, this maximum will be weak, because he did not trade 0.5 of this range. In this case, we take the grid and reach the newly formed minimum. That is here. And as a rule, the average value will coincide with this maximum. Well, here it does not coincide very much, but on real graphics it is usually very close. And accordingly, this high will act as the main inducement. We have the first rollback. That is inducement, and there is also the main one. For example, there will be the largest. This, as a rule, can be some unconfirmed maximum. Technically unconfirmed. Or such a maximum, which did not trade 0.5, and when the price breaks it, it will be a fake break. Because there was no trading of this range. But now the price is traded. And in fact, here from the extreme block, for example, from this extreme, you can actually sell and not buy. In fact, it was like a fake charge. Moreover, here on the older time frame, we usually trade the time frame M15. That is, we have the main time frame. This is M15. We look at it in the structure, and on the smaller time frames we go in. And due to the amplitude of M15, of course, we will have very large transactions on the smaller time frame. Among our strategy, which we trade, we get transactions from 1 to 10 up to 1 to 20. That is a very large RR. If you do everything right, you will really work out such transactions. For example, we had a fake break here, and the price continues to move down. Moreover, on the older time frame, again, if we use M15 as the main time frame, we can already take it as the hourly time frame. Most likely there will be an inducement here. That is the first rollback. That is, we will not have this on the part. There will be this movement, and here there will be a correction. The price removes the inducement on the part, for example, with regard to this block, and the movement continues down. That is, we have determined a downward narrative for ourselves. But technically there was a break here. But based on our developments in the field of determining the context and narrative, in general, it is necessary to sell here. And as a rule, in most cases, the price shows a downward trend, but still, it is impossible to ignore the fact that technically there was a break here. Yes, although it was fake, but it was. And sometimes the price can go up. Well, you understand the probability. That is, there is always a chance that the price will go up or down. There is no 100 guarantee. And this is the whole point. For example, if you have a probability of 80 of the operation of this setup, then of course the distance will be in the plus. But it happens that these 20 of 10 days, 2 days for example, you will have such a price that will break through this situation. But it's okay. If you treat this normally, then of course it's okay. And so, the classic structure of smart money trader is this swing. It is more likely to be bribed. For example, you enter the long after the break, the price reacts, it attracts people to buy. Usually this happens super impulsively to show people that the price is really going up, to inspire them to believe that there will be a movement up. And as a rule, the price just continues to fall further down. On the chart, we will now analyze all this in detail. In order to understand exactly what the price will turn around here, you need to use our universal setup. Usually, everyone uses the setup with the break of the first roll and the entry from imbalance. But this is not quite effective. Yes, it works, but not in most cases. Then what are we going to do? What setup to use? Also, the break of the first roll, but we will also have to wait for the formation of an inducement, but in the opposite direction. Here we are waiting for the formation of a correction, and when the price takes it off, at this point we will immediately open short positions. But what is the catch? The price will always try to lure you into the wrong direction in any way. For example, it has a target down here. It will be here. It is clear, of course. But during this downward movement, when it will fall here, it will try to lure you into the purchase in any way to convince you that it will go higher. And this can be explained. This can be understood. That is, to expose the price, that it will not go higher but will go down, can be easily done. It's just using the right setup and ignoring all false corrections which are made to lure people. So as a rule, here people first see the break and start selling from imbalance. But then, when they see the break in the opposite direction, they start buying. That is, they close their short positions themselves. Because the main goal is to get to the minimum, but as much as possible with a smaller number of shortists, so that they also earn less. And vice versa, so that the price knocks them out. And the best option for the price is not to go higher. Because, well, damn it, go higher, then turn around again and go to this minimum. It's hard. Therefore, it will deceive people with all sorts of psychological tricks, so that they themselves convince themselves that, for example, we will have a move up. They will close their transactions themselves, or they will be knocked out for no reason, and they will open long positions themselves. And this will be fuel and motivation for a new move down. That is, the price stimulates a new move down with the help of these stop-loss traders. You see, right? That is, this high does not quite stand for liquidity. It is more of a psychological bait for traders. All this can be seen and understood very well only by trading online. Only by trading online. If you trade live, also record it directly on the record and re-watch it. It's very cool, because you can follow how you react to a particular move when the price starts to do such a bait. You can watch it on our Telegram channel. Dick's Trade Production, link in the description and in the pinned comment. A lot of useful information is posted here. Let's take, for example, September 13th. What's going on here? That is, I write hello to my friends every day and immediately send an analytics for today. Usually it's EURUSD, USD CAD, GBP, and something else. For example, on this day I had an analysis on September 12th. September 13th. There was an analysis on EURUSD in the long. I drew such a warning. It was a time frame of 15. That is our main time frame. Please note, that is, we were filmed here by inducement. You see the first rollback. And how did it film it? Super impulsively. That is, it encouraged traders to sell. That is, these impulses involved them in the sale. There was also an analysis on USD CAD. And everything else on USD CAD. Let's see how EURUSD works. We see that in principle it went up perfectly. There was a warning, then a correction down. I also wrote ready for flight. That is, ready to move up at this point. I wanted to buy. Why? Pay attention to this situation itself. That is, we have a range from this minimum to this maximum. Why is this maximum? Because we have in principle an appropriate impulse. And the price was taken off by inducement. Where was it? Where? Here. Here. You see, here is the first correction. Impulse. Impulse correction. The price is taken off. And what do people do? They sell because they see a break. They see a break. And we see the stream of sales. How impulsive it is. But I didn't buy it. And on the contrary, I wanted to buy. Because in fact, the impulse is taken off by inducement. We have a stream of orders. And the area where the price may turn around. It was at 14.44. And already at 16.12 I throw it off the terminal. Here is such a result. There is 1.6. That is a very good error. This is not like they say there is an average algorithmic 1 to 2. That is, this is a mess. Well, how 1 to 2? Well, is that a lot? Well, how? Why take a small error if you can take a lot more? That is a lot there. At least 1 to 6, 1 to 10, 1 to 8. And on average I take them. Scroll my channel at least 2 or 4 months. And you'll understand what I'm talking about. Here is the work respectively on EURUSD. We removed the impulse and went further up. You see, here is the deal. Let's take, for example, some other day. Even on September 11th. And here are the trading records themselves, about what I said. That is in the morning. Now I will show you quickly. Here I also wrote hello to friends as usual, and sent to the analyst. On USD CAD, the same time frame M15 we have. Pay attention to how I did it. That is long. Of course, long. Why? Because again, apparently we had an impulse here. Adjustment. Here's a new impulse. There were small corrections inside it. Well, not the point is important. That is, there was a reset of this high, its sweep. And it broke this loya. In fact, even this loya, that is here traders sold. We see it. Because you see, here's the break of this swing. There was an imbalance. Block. This block is on the higher TFR. Most likely. And people went here for sale. But I wanted to buy. Because I see again the withdrawal of the induced fund. In principle, an ascending impulse. Rising movement. This is our whole. Here. And here's the flow of orders. That is the first zone of interest. Also analysis of the pound. For sale too. You see, because the price again grew. I took this high. And what is this high? What is this high? On the higher TFR, pay attention, this is also an inducement. The price is still taking off the shadow. That is, if it takes off the shadow, the inducement. This is generally ideal. Because this is FESFCHA. This is an additional point of entry. And here is the analysis of the euro-dollar. So we had Asia in more than 20 points. I expected that London would be more consolidated. That is such a side. And then there will be a New York. Here is the news. There will be an impulse. Do you understand? Again. How much is the price? What impulse did it make? Look, how much? It broke this maximum. This maximum. And this maximum. In fact, people bought here because they saw a break. Also, here is the analysis of gold. And on GBP, GPY. And let's just look at the processing at the end of the day of all this analysis. This is September 11th. Here we have processing on GBP, GPY. Perfect movement up and down as I wanted. Processing on USD CAD. The zone worked perfectly. The price went on the trend. Do you understand? Here. For the processing on Funto. These are 3 beautiful, huge, delicious positions in short, which we took. And here was also a trade record. How these positions opened in live. And that's what I'm talking about. Please review this trade record. Because it is very useful. You will yourself grab all these factors on the go. That is how the price in live bites people. How it motivates their buyers to sell in the wrong direction. Here is the analysis of gold. Here is the EUR/USD. Here are 2 stop losses. I'll show you now. Here are 2 stop losses because I didn't count a little there. But then the perfect take. Here's a screen from the terminal. Here. There was also a screen somewhere on Funto from the terminal. Yes, here. M5. That is, there were still such EUR/USD on Funto. Just fine. And everything is clear. Based on the logic of motivation. Because again, look. You see the price takes it off everywhere. On M1. Here it took it off. Here it took it off. And went further down. Because they see a break. And with such impulses. You see, look. What is the point? How strong is the impulse after this break? That is, how much does the price involve Travers in the purchase? And what is their faith in the fact that it can really go higher? Moreover, there was a problematic zone in the form of an imbalance of the starshot frame. But then it suddenly turns down. And what is this high? This is the maximum. That is the inducement of the starshot frame. They're most likely M5. Do you understand, right? Moreover, this correction is not a star gold impulse relative to this maximum and this minimum. Therefore, this high will be weak. This will be a fake break. Fake chutch. I hope it is clear. So again, go to the Telegram channel. A lot of useful information. A lot of analytics. There is also Dijkstra education. This is a channel with useful posts. Here are such useful posts with explanations on training. Also again, Vector. All sorts of examples. What will you do? The price took a break. There is a block. Will you sell or not? But the answer will surprise you. Why? Because the price took off the inducement and gave an impulse up. Because of the impulse movements, all stop losses are removed. Immediately. Because news is a way to reach your goals very quickly. So subscribe. There is also a crypto channel. Dijkstra Red Crypto. Today we had a deal on IYing. More precisely, 2 scenarios. Either the price goes here or here. You can also scroll. Look, for example, yesterday. I also threw a deal on selling. The goal, of course, is too high. But then I worked out 1.5, closed it and calmly went to rest. Let's even look at this deal on ING. How is it going now? It seems to be going well so far. That is, there is a movement up. The deal is 1.4. Here it can be 1.6. Here. Okay. Let's continue. Let's continue. That is about these bites. You must understand that the price will always buy you in any way. What setup will you use? If you mark this structure on M15, here in the extreme zone, you will also look at the time frame M15. That is, it makes a charge. It removes inducement. Of course there will be a movement up, because people need to be lured into buying, and then a good movement down, And this is exactly how your all points of oscillation are formed, that is, your maximums and minimums. This is such an introductory video because there will be further in the next part about the structure you can also watch on YouTube. So subscribe to this channel of mine so as not to miss these videos. I hope that I explain everything very clearly, very simply, because you need to rewatch this topic several times to fully understand it. Let's go to the real chart. I'll show you how it works. So here we have a real chart. This is oil. Let's start with this maximum. This is the highest point because here it turned around, pay attention, and it immediately begins to form a trend. Everything goes very nicely, as you can see. It removes this inducement, thus confirming this minimum, and rises higher, touches this supply, and goes down, thus making a kind of a boss. Let's mark it like this, and confirms this maximum. Then we have a new impulse, and thus confirms this minimum here. No. Why? Did it remove some kind of rejection here? No, it's just an internal structure. And only here a new minimum is confirmed because the price removes a new correction, a new liquidity, and this supply goes further about the correct formation of the supply. Demand zone. You can also watch the video on the channel why I highlighted this point as a block. Or here too, then you will understand everything. Then we have a boss, and a new maximum is confirmed here, but pay attention to what happened. In fact, this adjustment did not start this impulse. There was no way to buy, so we will consider this high as weak. Then we have to define a new minimum. It is here because the price removed a new inducement, and people will buy here. We can see that the correction has started, and they started to buy from the block, and the price really increased. But why? We will consider that sometimes their patterns will work. It's a probability, but usually they're setups of smart money traders. They work only when the price needs to reach a goal. Based on our strategy, why? What was the price's goal here? Because here there was no 0.5 trade. So we take the grid and reach a new minimum. And what do we see? That this high and 0.5 are the same, and this will mean that this is the main inducement, the main liquidity. And how does it work? It removes a super inducement. Doesn't it look like a new attraction of people to buy? The price tries to drive them to buy. That's why here it is worth selling, because the trend is not going down. And the main points of fluctuation will be marked maximum, minimum, maximum. It's all one movement, a new minimum, a new maximum, and a new impulse. The price didn't invalidate them because they didn't trade 0.5. So it turns out that there will be an inducement. But where did the price go? Here we had an extreme zone. It turns out that this stream of orders that the price mitigated and went down. Yes, we didn't have a tick here, but the price removed the inducement here and turned down. Of course, it had targets for updating this. Minimum, here it was a boss. After it, we had a new maximum. How could we go here? Let's turn on the simulator and go to M5. We go to M5, and what do we see? The price made a tick here, it removed the inducement, and after absorption you could go here on. This switch stop for self-formation. There is no point because if the price goes up it will go up. So there is no point to cut the income. We set the target. And here you go, 0.1. Why is our strategy so effective? Friends, why do you need to take this? When? You can, based on the real good rules, take this and that's it without any tricks, you understand, right? Everything is clear based on the knowledge I showed. My video was released last year. I was talking about this every day. I publish the results of the Telegram channel deals. So subscribe and follow. Let's see what it does next. It goes down to the new maximum. Now we need to find a new minimum. We look and see that the new low has Been confirmed here. Why? Because the price went down and removed the inducement. People think that this is a break and they are forced to buy before this imbalance. But look what happens next. The price seems to go up, and look what kind of impulse it gives. But here people have a strong belief in the long plus, the imbalance is higher. Of course they will not buy it. What do we see next? The fall. The price has updated this low and made it a boss, thus confirming this high. Then we looked at. In fact, there is no inducement. No, therefore this high is still weak. Let's see what happens next. We see that the new low has not been formed, yet the price just falls below. And we see that the new low has been confirmed here, because the price has already come out removed. This inducement also removed all this liquidity. And let's see what else we have. We have a problem area which looks good, and we also tighten our grid to see where the middle value will be approximately behind this block. Let's see what happens next. What does it do? Look at the logic, how in live it goes and bites people. Look. Please, people think that this is a trap, that is, the price will continue to fall. When it comes down this block they will buy. And what we see, if people buy, then we see it in the graph because it gives us a reaction super impulsive here. Half of the people bought and the other half is just the price gave a decorative impulse to involve people in the purchase on backtest. It is difficult to show because here the candles go one by one, and when you see it all in live when the price is slowly going, please review the online trading records, go to the pinned post, and here in the rest of the links there is a trading record. Just look, just a sea of videos, with online trading records, all such super cool here. There is online trading right away before opening because online it will be more clear. There was a reaction, it made a new boss, and confirmed this high. But again, we do not have 0.5 in trading, so it's bad. Further we look, we see that we have, in fact, here there is a formation of a new minimum. It removes the inducement, and of course people will buy. Here look, it came to this zone. Do you think there will be a reaction or not? Well, it's already going. I forgot to say about when the price does not trade the impulse. There was a risk that it would not turn around here and would go further and trade 0.5. Of course there is a chance, but you can understand when the price will turn around, because here we have a stop price. We had a chuch. All the inducement is here, and the movement further down to the order flow. So take it easy and trade this movement, and do not be afraid that the price will go higher. It will most likely go another time further. We see that we have a reaction, people buy, but then the price goes down, and pay attention how it does it. We had a risk that it could go higher, because in fact we do not have a trading from the old range from this minimum to this maximum. Imagine what a huge range, but in any case the price will trade it someday. But now when it does not do it, you can easily trade it. How? Just looking for a setup on M15, on M1, M5? No, because it is not valid. What does it do? It touches this extreme block here, even when we go through the zone of interest. You are stunned how everything goes perfectly here. Everything is perfect and super simple. Because when you watched a video about the order blocks in the classic Smart Money, you were shown how to look for blocks. You go to the schedule. And in this impulse you have millions of blocks here. In our strategy there are only 2 correct zones. If you have 10 zones in impulse, you will know which zones will work. Do you understand how perfect it is? Here we have a break of the first minimum and the removal of the inducement. The removal of the inducement is done in the opposite direction. Snag is removed, and here is the impulse. You trade here, everything is perfect. Here we have a boss. Here is a new lull. Do you understand what logic? When you have a non-traded range, you see that the impulse did not trade 0.5. Therefore, these minimum and maximum will be weak. There is a risk that the price will go higher in the next range because you have a net. It coincides with the maximum. The price will go up. And for example, it will break the inducement and all the blocks. There is a risk. And the price will do it in due time. Because most likely, it will not do it right away. It will remove the inducement and go further. And how to understand? Is it higher or lower? Here it is very simple. Here you are looking for a full-fledged setup, slump chochia, A2 in the entrance, to understand that the price will not go beyond 0.5. For the average range, here we have a boss. The maximum was spent here. Not here. Here is the highest point. Next we have a boss. And we need to find a new menu to determine our range. Let's stretch our grid to this lowest point. Here we have no inducement, because in this impulse, there is no correction. Therefore, the minimum is not confirmed. But what else was there? In fact, there was this setup. There was a slump. Remove the inducement and the entrance. And for this impulse, we do not need an inducement for the second entrance. This is a specific situation about the point of entry. We will discuss this in detail in the next videos. When we have a slump, remove the inducement for the second impulse. In this range, we do not need an inducement. We can enter the block or the order flow. Therefore, there is a chance that the price will go from this zone, from this flow of orders. But we still have a stream zone here. But I do not think that the price will go here, if the price is formed. Sub M15. Up to this point, let's see what happens. We see that the price reaches this zone. Has already gone down. Made an impulse here. And as we see, it is already falling down. It has fallen. Why did this happen? Because it formed a knee here, from the inducement. Therefore, we cannot sell here. And people sold here after the slump. What is the beauty of this logic? Because everything is done so clearly. We enter a clean movement, not a false movement. Because here, you thought that the price was formed, and we can sell. But no. This movement was removed. And this small inducement. Only people came here who saw the block and started selling, but the price went down. It was the second inducement. It was removed. And pay attention how it fell from here. But it is not confirmed here. This is the internal structure. And we see that the grid shifts even lower. Let's see what happens. We have a new minimum is confirmed here. We see that a new rising, secondary trend, usually after the falling news, impulses, a secondary rising movement, against the main falling trend. And we see the exit. It really forms a trend. It removes the inducement. Here a rising structure. Secondary, but the main maximum. Technically correct. But the main maximum remains here. Because it is the maximum of the main range. Also here. If we go to the main frame and determine the general context, here we have all this trend liquidity. And what is the beauty of 0.5 trading? Because we see that the main maximum is here. And the rest of the liquidity. For example, here it can go up and then turn down. September 14th. We see that in fact, it goes higher. Removes the inducement. It touches the zone. How can we act here? Let's take our time frame and see what happens. Here's the main range. From this maximum to this minimum. And here we will work. The rest of the points are weak. We traded, but they did not trade 0.5. Now it is a secondary trend. Removes all the liquidity. What do we have here? Here is the inducement. The main one. Block where will be the first block. Here it is not. Here and just above 0.5. It will touch the block and turn down for this liquidity. Or it can break this block and go to the second block, which is here on the extreme, the second zone. Two scenarios. Plus we have on Tuesday. There will be some news 8 o'clock. Maybe the price will be on Monday and on Tuesday. On this we finish. Thank you for watching. The video turned out super rich. Of course, this knowledge is not enough to effectively trade. This is the base for you. On YouTube, I post all videos for beginners. Basic elements. If you want to learn as much as possible to start trading. We have this instruction. Very cool thing. I really advise because it will be useful. But I hope you will leave this ineffective structure because what I showed is what really works. What I have learned when I studied. I got knowledge only from inducement. Everything else I learned by myself. I learned from my own experience, new patterns in the market. And this is what works. And it works perfectly. You can see this on my Telegram channel. Link in the description. Thank you all for watching. Like, subscribe, write comments. Make an asset.